The RAV is called Rapid Vehicle 4. That's how the markets finished off last week on those appetite for banking stocks and other defensives, those who were directly or what you call the intermediate targets of the asset management company's operations. Now that most of the rescued banks have got hundreds of billions of naira in cash for toxic assets, the end of the phase one is where we are right now. So let's take stocks with the market for the week we just finished. Nigerian breweries stole the show last week with those news of Heineken's making acquisitions of some dormant and weak brewers in Nigeria, 5 of them. The story is still unfolding. So the food beverages index was up 2.2%. A very aggressive trading week, 3.14 billion naira. Unimaginable just about a year or two ago, 26.2 billion naira, and the market cap for equities is heading towards 9 trillion naira. But very quickly, this is what our trading board looks like in summary. Thank you, folks. Can we move it? The next one. All right, here you go. That's the trading board, just a summary or a snapshot of what you see on the program moving forward. We are coming on Friday with that volume and, of course, the market cap there and the composite index. If you check through what we bring in you from today, the rescued banks index, we'll try to track those 8 banks now. Those folks are the ones making the headlines sit well. You see these every day on the show moving forward. We'll try to put this together for you to get a very quick snapshot of how the rescued banks are performing. In terms of turnover, you find out that Finbank and Intercontinental, as well as Bank PHB, were the leaders for last week, as well as Shoshonic, when we move to the next page. In terms of price, Afribank and Intercontinental are still leading. In terms of market cap of those rescue stocks that went up to almost zero in 2009 and early part of, better part of 2010, Intercontinental was around 54 billion naira on Friday. If we go to the flip side, for Oceanic, Spring, Union, and Wema, the other 4, most of the 8 of the most affected in the Lamido's rescue operation. Springbank came in last week with the smallest volume, 3.66 million. Oceanic also did a very strong turnover volume for the week. And as of today, Oceanic Bank is the leader among the rescued banks in terms of market cap, coming first, 77.1 billion. Union Bank is second, 72.6 billion. And Intercontinental in the third position, 53.9 billion. A very quick look at the money market. We told you from today the interbank market call money will likely hit 10%. On Friday, we stopped at about 9.4% because of cash crunch. So, despite those repayments of matured treasuries by the Central Bank of Nigeria, we still saw open buyback between banks and discount houses still at about 8.25%. It's a very cautious move for the naira on the US dollar at 150 to the greenback on the street. Okay, let's move on quickly. See the money market numbers in a more broader picture. Call money, 7-day money actually crossed to 10%, 30-day 11.3, 60-day 12.41%. Of course, the Federal Executive Council will meet for the first time on Wednesday this week in the new year. So if more money comes in through those capital allocations, then you see some so-called rainy season in the interbank market. Okay, let's leave it at that. Folks, we need to move on quickly. Almost 20 minutes past the hour. Let's take a first break here on the program. Wale Oluwo is here this morning to discuss more of politics than the markets. He's trying to get a mix for us. It's not the first time that corporate Nigeria has always supported one presidential candidate or the other. It was late Moshood Abiola in 1993 on the platform of the Social Democratic Party. Later in 1999, the former president Olusegun Obasanjo got the nod of the markets for his election on the platform of the People's Democratic Party. And in 2007, the late President Umaru Yar'Adua, well, got a hand of friendship from the capital markets on how to finance infrastructure through the debt capital market. So who will the market vote for in 2011? That's where we are. We'll be back. About 22 minutes past the hour. Let's bring in Wale Oluwo from BGL Group. Good morning. Thank you very much for coming through once again. Sorry, we're discussing politics and markets.
No, we're discussing
the impact of politics and elections on the markets.
Yeah.
Very interesting. I'm sure you hear the background. You were around all those years. We talked about before the break. You were there in 1993, isn't it?
Yeah, I've been there.
When the corporate Nigeria actually supported MQ Abiola, who then was the president of the Nigerian Stock Exchange.
Yeah.
Then the corporate Nigeria also raised funds and supported Olusegun Obasanjo back then. The argument from, if you would take the wordings of the former Director General of the Stock Exchange, Dio Okereke, was that the support of the market wasn't for political parties, but for individuals who the market believed would be credible and would advance the interest of the market. Take us through the level of romance between politics and the market historically.
Well, I think that scenario is not peculiar to Nigeria. I think what we have seen, internationally, is that markets usually want stability, and they are always very receptive to continuity in a way. And if they believe there is an existing policy that is consistent with where they believe the direction of the economy should be going, then chances are that they would be favorably disposed to the candidate that is there to continue. But by and large, I think markets are also much more comfortable when one of their own, or one that has been relating with them more closely, is the one contesting. Chances are that they believe he can understand their language, and they can have access to him. That was the case of Abiola. In the case of Abiola's election, I mean, it was clear that someone coming from the private sector is likely to understand what the private sector wants and how policies of government can impact on the private sector. And you see, that is also the problem that Obama is having now, because a lot of folks in the business community in America are saying these guys in government, they've never run anything business before, particularly Obama.
But Wall Street voted for Obama. They supported, they financed the part finances campaign.
Yes, they did. And they've been supporting a lot of presidents like that. Yeah. But in the case of America, you see, you don't have so many options. You only have, it's either you take this guy or you take the other guy. So a lot of people will believe McCain is not going to focus on the economy. So even if Obama was not bringing the best of economic model for them to take, but relative to McCain's position, clearly they will support Obama. And that was